Hey everyone, Rob Folia Properties at Keller Williams Realty here in Nashville. And I want to give you the truth behind interest rates and at the same time revisit a saying that we heard last year, as you see here on the screen, this marry the house and date the rate. I went on record pretty strongly last year of saying, hey, I do not agree with this saying, marry the house, date the rate. I think that was misleading. And we're going to kind of revisit that and just kind of jump into it. And this saying originated because last year, for those that don't remember, interest rates really jumped. I mean, this is the 12-month run of interest rates on the Freddie Mac website. If you go back even further, you can see. If you go back even further, you can see right here, January 6th last year, they were 3.22%. By November 10th, they were more than double that. And so that's why, a lot of loan officers, some real estate agents were saying, marry the house, date the rate, blah, blah, blah. And they what they were saying was you can refinance later. They were saying, hey, rates will drop, you can refinance later. And these are probably the same experts that were, just throwing out there into the world that rates were going to be in the fives by now. And look, they're still in the mid sixes. This is the 30-year fixed rate mortgage average according to the Freddie Mac website. They've been hovering in the mid sixes for the last really all year, and so they might have their peaks and valleys, but at the same time they're in the mid sixes. And so you can see marry the house, date the rate. That didn't really help anything, but I think it doesn't help anything, and I think the reason why people were saying this, aside from the fact that rates jumped, and this was just something I found on Instagram. I remember having spotlighting this last year, looking at some numbers, and I thought it was important to revisit. And just look here in the end of the first paragraph, you can see that for when rates jumped up here, it's a basically 6.3%, 6.29. This is straight from NAR research on Instagram. They were saying that the monthly mortgage payment of a $400,000 loan had jumped up from 1660 to 2470. So almost a 50% increase in a year, which is, it's an insane impact on affordability. And so it's very natural for homeowners who are maybe selling their home to think, well, when rates go down, the market's going to improve. But guys, we don't know when that's going to be or if that's even going to happen. I mean, there were people probably right here that were saying, when rates were, getting into the fives, that were like, hey, well, when rates are back into the fours, that's when the market's going to be great and I'll be good to move forward. And boom, we got into the sevens, and we're just hovered in the sixes for the last 12 months. And we might not ever get below six again. We hopefully do, but we might not, and we don't know, is my point. And so the truth about interest rates, the reason why I wanted to do this video is I wanted to say that you can't forecast what rates are going to be. No one has a crystal ball as to what's going to happen. Hopefully they drop, and yet we don't know. And so make your decisions, whether it's your selling decisions, your buying decisions, on what rates look like today. And in fact, I just wanted to show how interest rates have impacted us just based on average numbers. As always, you can access this right here, this mortgage calculator, on foliaproperties.com. Up top, click Folia Properties to drop down, go to mortgage calculator, and there you go. Anyway, let's just look at what's the median sales price for Davidson County last month. 445. Let's plug in just that number on the mortgage calculator and go from there. So let's just say it's a $445,000 home. Say somebody's putting 20% down, right? So they have a loan amount of 356. And we know rates aren't 3% any longer, but I wanted to put 20% down so that way we can get rid of PMI. That's a whole nother conversation as to what all that means. And you can see right here, if rates were 3%, this $356,000 loan accounting for $200 a month in taxes, $1,000 a year in homeowners insurance, you're at close to $1,800 a month. Now, let's just plug in, sorry, let me get the right tab pulled up. Let's just plug in this number, 6.67 for the interest rate. Now, a fair warning, most lenders, your rate's going to be a little bit higher than that. When I say a little bit higher, it shouldn't be a point higher, like a percent higher, but it's going to be a little bit higher. And there's a reason for it. Sometimes when we're looking at this number on here, this has to do with certain buy, like this is the par number. And so sometimes and I'm going to let a lender tell you a little bit more about this than I can, because they can tell you a little bit more. But my point of saying this is that there's going to be some cost sometimes to buy the rate down to that for them. lenders also do have to make money. I mean, they run a for-profit business, and so some of their profit comes from that as well. But again, I don't want to don't I don't know enough about it because I'm not in that business. I'm in the real estate business. Um, Anyway, I just wanted to say, let's just plug in this number. But if you have a question about all that, I can get you connected with a lender who will tell you the truth about it all. But let's just plug in that number, 6.67. So again, nothing else is changing. 445 home price, 20% down, but our interest rate's more than twice what we were just looking at, and we are at what? Here, I'll just make sure we get the right number to compare it to. 1784. If we change this and don't change anything else, 2573. So I mean, you can see the payment's gone up by about $800 a month. That's mental math here, 40 to 50% of an increase, similar to what we saw here from these numbers last year. My point being, and I'm not trying to scare anybody with numbers. My point and my reason for sharing all this is simple. We don't know when or if rates will ever be back down to this, and payments will ever be back down to that. And we might be jumping for joy if rates are here at 5% and that payment is $2,200 a month. And this is just kind of me rambling here, but in my opinion, this home price right here, this 445, kind of the median to lower home price in our area, has been impacted the most by this, because most people that are getting by on a $2,200 a month payment, or a $2,200 a month rent, or a $2,200 a month mortgage, they can't afford to have a 7% rate and be at 2,650. They just can't afford those types of jumps. I mean, that's a $400 or $500 a month jump for most people. And so my point in sharing this is simple, that as we're looking at the market, pay attention to the numbers as they sit today. Because that's the truth. We don't know what rates will be next week. We don't know what rates will be tomorrow. We don't know what rates will be next month. We know what they are today, and we know what they were in the past. And we just don't know what they're going to be in the future. And so make your decisions based on how this is right now, and be prepared to live with that decision for the foreseeable future. So let's come full circle to this conversation. We were talking about this at the very beginning: to marry the house and date the rate. That's a bunch of BS. If you're marrying the house and buying the house, you're marrying your mortgage rate for 30 years unless you refinance. And I'm betting people are starting to see that over the last year, and all the lenders. And I'm not going to spotlight this lender that I stole his graphic off of on LinkedIn. I'm sure you can probably find it yourself if you wanted to. But my point being, most lenders that are out there might be kind of stuck their foot in their mouth last year when they said that, marry the house and date the rate, because it's just not the case. There's no way to go back on things and say, all right, well, give me that 5% rate that we saw, a year ago. It's just not there right now. And might not ever be there again. And so if you're buying that house and you're marrying that house, you're marrying your mortgage rate for the life of the loan. And so remember that, and remember that for your decisions too. So if you're say thinking of moving, but you don't want to buy a new home with a higher rate, you're married to your current situation, your current, home, your current everything. And there's no dating that. There's no dating that decision. I mean, there's dating it to a point where you can always decide to do something else. But this market that we see today won't be there. And if just say, you just say you thought about doing something, you're on the fence, and you waited and you wait and you wait because you hope rates drop to 5% again. And by this time next year, rates are 8%. There's no going back to say, hey, give me that 6.67% rate. It's just not gonna be there. And so make your decisions. Let's just end this video on this statement. Make your decisions on how the market sits today, and make sure you can live with it long term. As always, y'all, I'm here to help if you need anything. So no question too big or too small. I'm happy to answer them all. Just hit me up. If you're seeing this in your email, hit that reply button with any questions. If you're seeing this on social media or you're seeing it on YouTube, like us, please do. And please subscribe on YouTube as well. And drop a comment. Happy to help however we can. And until next time, y'all, Rob Folia here with Folia Properties at Keller Williams Realty. We'll see you soon.